All right, today we're going to talk about a really interesting company called IREN. Now, on the surface, it looks like a pretty straightforward Bitcoin miner. But if you dig a little deeper, there's a fascinating argument that it's secretly becoming a powerhouse in the AI revolution. So what is the real story here? And that really gets to the heart of the puzzle. Is IREN just another company mining Bitcoin, or is it something much, much bigger? A key infrastructure player for the entire AI boom? You see, the market seems to see it one way, but a whole different analysis suggests we might be missing the real picture.
And this is where it gets really good. On one hand, you have the market's view. They look at IREN, see it's trading at a revenue multiple around 7x, which is way higher than its peers, and they say, whoa, that's one expensive Bitcoin miner. But then you have this other perspective, the bull case, which says the market has it completely backwards. They see a deeply discounted AI stock that's just disguised as a miner. And that gap, right there, is what we're going to unpack today.
So first things first, let's dig into that valuation. Why on earth does the market see IREN as so pricey compared to all the other miners out there?
Okay, so this chart just lays it out so clearly. You can see IREN's valuation. Its enterprise value to revenue is way up there at around 7x. Meanwhile, its competitors, the other Bitcoin miners, are all hanging out down in that 2 to 4x range. So yeah, if you're only looking at it through the lens of a miner, it looks seriously overvalued. But that's because we're not seeing the whole picture yet.
So how do we explain that premium valuation? Well, the key is to understand that IREN isn't really one business. According to this analysis, it's actually two businesses working together.
Let me introduce you to the dual engine model. Engine number one is the Bitcoin mining operation. Just think of this as the cash cow. It's super efficient, really good at what it does, and it just churns out profits. Engine number two, that's the AI cloud business. This is the growth engine. This is the hyper-growth, super high-margin business that really represents the future of the company.
And when we say premium margin, we are not kidding around. Look at this number. The hardware profit margin on their AI cloud services is a mind-blowing 98%. That means for every single dollar of revenue they get from these powerful GPUs, pretty much all of it is gross profit. This is the engine that's ready for some serious, explosive growth. Now here's the magic. It's all about how these two engines work together. The super profitable mining business, the cash cow, it generates all this steady cash. That cash then gets funneled directly into buying more of those high-demand AI chips, which, as we just saw, have insane 98% margins. This creates this incredible, self-funding growth loop that pure AI startups, the ones who always have to go ask investors for money, they just can't compete with that.
But believe it or not, the story gets even deeper. The real long-term advantage that IREN has isn't the mining machines or even the GPUs. No, it's something way more basic and way more valuable.
It's power, plain and simple. Grid-connected power. IREN has spent years locking down about 2.9 gigawatts of power rights, a lot of it from renewable sources. And in the age of AI, that is like sitting on a gold mine, because you can have all the fancy chips in the world, but you can't do anything if you can't plug them in.
And this really speaks to a massive trend. For decades, electricity demand in the US was basically flat. But now, because AI data centers are so incredibly power-hungry, demand is set to skyrocket by 26% by 2035. We're literally heading into what some are calling a power famine. And the companies that already have their power secured, well, they're in the driver's seat.
I absolutely love this quote because it just nails the strategy. Think of IREN as a landlord who owns a prime piece of real estate, which is its power infrastructure. For years, they've been renting that power out to a good tenant, Bitcoin mining. But now, a much, much wealthier tenant has shown up, AI, and it's willing to pay a huge premium for that exact same power. It's a brilliant move.
Okay, this all sounds like a fantastic theory, right? But is there any proof? Well, the argument is that this whole strategy isn't just a theory anymore. It's been validated and massively de-risked by some of the biggest names in the entire tech world.
So they've basically locked this thing down from both sides. On the supply side, IREN is an Nvidia preferred partner. That gives them priority access to the best chips, which is a huge deal when everyone is scrambling to get them. And then, on the demand side, they've signed a massive long-term deal with Microsoft to provide them with AI cloud capacity.
And that Microsoft deal? We're talking $9.7 billion over 5 years. This one contract completely changes the game. It takes the whole idea from a speculative bet and turns it into a concrete, contracted-out plan for one of the biggest companies on the planet. I mean, you can't get much more validation than that.
Okay, so let's pump the brakes a little bit, because it's not all sunshine and rainbows. To get the full picture, we have to look at the other side. The report also highlights some pretty big risks that could totally derail this story.
First up, there is huge execution risk. I mean, switching from regular air-cooled mining rigs to these super advanced liquid-cooled AI systems is a massive technical challenge, and they have to do it fast. Second, there's concentration risk. The whole bull case is basically riding on two companies, Nvidia and Microsoft. If anything goes wrong with either of those relationships, it's a huge problem. And finally, there's the chance of dilution. The company has a billion-dollar financing option that could mean issuing more stock, which would reduce the value for current shareholders.
So you can really see the two sides of the coin here, can't you? The bull case is all about these powerful big-picture forces, the deals with Microsoft and Nvidia, and having control of all that power. The bear case is focused on the internal stuff. Can the company actually pull off this complicated plan without messing up? And can they handle being so dependent on just two partners?
So, after weighing these two powerful, competing arguments, what's the final takeaway from the report on this whole opportunity?
So here's the bottom line. The whole opportunity is about what they call valuation arbitrage. Right now, the stock price reflects the idea that IREN is a risky miner. The bet is that once the AI revenue really starts rolling in and becomes the main story, the market will have to reprice the stock as a de-risked AI provider. The whole game is to get in before that big re-rating happens.
And the final call from this analysis is bullish. It basically concludes that, yeah, the internal risks, the execution challenges, they're very, very real. But they're simply outweighed by how massive that external validation is. That $9.7 billion contract from Microsoft is seen as such a powerful de-risking event that it just changes the entire nature of the game.
And that leaves us with the big question. Is IREN writing a whole new playbook here, showing how you can turn the infrastructure from one tech boom into the foundation for the next one? Or is this just a super high-stakes gamble where the technical hurdles are just too high to clear? That's the multi-billion-dollar question the market is about to answer.